Welcome to another chart breakdown. So for today we're going to look at our primary pair, which is AUD USD, and we'll go into looking at Euro USD, which is also a secondary pair for us, and possibly we can look at NU and Euro JPY. So I'll start with the primary on a chart that has no markups. Okay, so we are in a new week and we are in a new month, so it's always good to have everything clear. So based off an analysis that we did last week, we mentioned this in the previous video, that since we are still in a bearish market on Australian dollar USD, we are still anticipating bearish movement. And even after the previous month's December's candle being bullish, we still expected January's candle to be bearish and possibly even engulf, based off the fact that the moving averages are showing us that there's still bearish movement. We're still in a bearish trend. Market has not broken structure. It's still going down. So as predicted, the market actually fell all the way from around here down. So let me see if I can find that video. Printed one engulfing. This candle we're expecting to drop. We're expecting this market to drop all the way down. This engulfing candle is irrelevant because it is against the trend. Notice the same thing happened again. It's against the trend. Yeah. So we are anticipating some very nice bearish move, and that should close the month strong. So by the end of next week, we're expecting this candle to close strong bearish, but we can continue going through the next anticipated area of reversal, which is this lows of 0.6287. Great. So based off that analysis, that was last week on Monday, we can notice that is exactly what the market did. And going down to lower time frames to be able to capture that move, that anticipated drop, based off that analysis, we still went to the weekly time frame and noticed that the market did not break the true high, which was this one. I'll try to see if I put that line there. Yeah, did not break that high, which was the previous true high. So it came back, printed this pattern, touched that previous high, then dropped. So this was before this candle formed. This was before this very bearish candle formed. So also, based off that, if you go to the daily time frame, you could notice something that we had talked about. Let me take these moving averages out. We notice this is a head, a shoulder, head, shoulder. This is a head and shoulder pattern. This is a head and shoulder pattern. And once the market hit the neckline, printed two dojis, then printed a bearish candle. After that, the market it was easy to determine that the market was going to go all the way down to the anticipated area of reversal, which was this green area. So that is what the market did. Dropped all the way down, 150 something pips bearish. Finished the bearish move, and now we are at an area of interest, because this is an area where market found exhaustion a couple of times. So the market finds support here. We expect it to go back, maybe test this trend line, test this high, test the previous high, or even the neckline itself. So let's wait through this week. Today we are now in a reversal market. So unless this candle closes bullish and shows us that we have some momentum going up, we're still anticipating for more drops, because remember, based off your weekly, all you're waiting for is that retest. Based off your monthly, all you're waiting for is the retest of that engulfing candle. So based off that, let me take out all these other markups, because we are done with that. We we were able to capitalize on that move. So we're removing all those drawings. So we're only anticipating the market to come for a retest around that price, that is 0.6762, or an even deeper retracement up to that high, which is 0.6923. So if the market comes all the way up, finds resistance, continues to drop, that's what we're anticipating based off where we are in structure. And that anticipated drop, if you used your fibs to measure it, this is off the monthly time frame, so this could actually take a whole year to actualize. Then these lows, notice the market drew an engulfing candle on the 38 level. So let me zoom into this. That engulfing is at the 38% level. So market now came down, has printed an engulfing on the 0 level, showing that it still has some very strong bearish momentum. So we're anticipating it to come and test these lows. Because that's a 500 pip drop. We're anticipating that, and if the market is ready to break structure of the monthly, then we anticipate it to go to the all-time low since 2003. Right there. So those are our targets for the year, unless otherwise. Those are our targets for the year. January has shown us what it wants the market to do. That's the open candle of the year. So now we're expecting it to go down all the way. So let's watch this market. We can catch moves up and down based off structure of the lower time frames, but remember that your larger time frames tell you we are still in a bearish market. So this is a rather detailed breakdown. So we go now to the Euro USD. Go down to the Euro dollar. We want to see what the market is trying to do. So it's good to use your moving averages to see where the momentum is. It's nice. It's still showing some bearish momentum, but the moving averages are getting close together. So it's something to note. Then notice that last month's candle did not engulf the previous month's candle, still engulfing bullish. But that only shows that there are more buyers in the market than sellers at the moment. So let's continue watching it because it's on an area of resistance at the moment. So down to, I'll even skip the weekly. Sorry, I've even skipped the weekly. Let me go down to the weekly. So on the weekly, the moving averages have crossed to show some bullish momentum. We still haven't broken structure based off that high. We still haven't broken structure based off this previous high. If we break above that, come for a retest, then we are totally in a bullish move. Then also the fact that we broke trend line, then came back. So we are still within that bearish wedge. I've indicated it here. We're still within that bearish wedge in the weekly time frame. So market could continue going down all the way down to this wedge support, then go up, or it could break above, test the resistance on the wedge, then go up, which is the anticipated move based off the rules of wedges. So if it does that, then we might expect a push of around 1,800 pips bullish based off the pole of the wedge. So this could be a nice bullish move. I'll also use fibs to look at where the market is right now. So the market is between the 78 and the 61. It breaks above, bounces off that 61 level. As I had said before, this would be a very strong bullish move because it will have broken structure. So we're watching that. So down in the daily time frames, just looking at what the market is trying to do within that very tricky area. And good thing about Euro USD is it's very clear when it comes to structure. Very, very clear. I'll use, when I'm looking at structure, I like to use black candles for that because I have no bias whatsoever. So if you look at this, so the black candles only remove the aspect of seeing a blue candle, a yellow candle telling you bullish or bearish. So all you see is market movement. So looking at what the market is doing, it broke the minor structure here, but hasn't tried to break the major structure on the daily time frame, but came back and was pulled all the way back down to the low. So as anticipated, we're still anticipating that break bullish. This was the previous anticipation. It pushed above, didn't break above that, formed a head and shoulder pattern. Notice that is a head and shoulder pattern. Let me see if I can use the tool itself. There it is. So since it printed that head and shoulder pattern, it had to, complete the move. And that was this drop. The anticipated full move was around 164 pips. It only did half of that, 80. We're still anticipating that drop to these lows. That's what we're anticipating. So we are yet to see whether this is actually a retest before now the actual drop. And if it is, then this is the full move for that pair. That's the full move for that pair, that drop. If not, if it breaks above, respects the third touch of this trend line and continues to trickle up, then we react. We only react, like we always say. So that's the daily time frame for that. For today, we are not going into further detail because we need to wait for the market to open its hand and show us what it wants. So that's just how you use the